All right, let's look at, will you pay taxes on your Social Security in this Can I Retire course? Now, I want to go a little bit more in depth for you today on, are you going to pay taxes on your Social Security? Because I believe there's a lot of confusion around how much your Social Security is going to be taxed, what it means for your Social Security to be taxed, and how that is calculated. So I'm going to give you the figures on the board on the income numbers, on when your Social Security is going to be taxed, how it's going to be taxed, and then we'll jump into a real world example at the end so that you can determine, will your Social Security be taxed, or will your Social Security be used in the computation? That's the key word, used in the computation of your taxes. Now, how the IRS determines if your Social Security is taxable is they use provisional income. Now, what provisional income is, it's your modified adjusted gross income. Okay, so it's all your incomes, maybe your IRA distributions, interest from your banks, dividends, your modified adjusted gross income, rental property, any income that you get from that you recognize. So your modified adjusted gross income plus 50% of your Social Security plus any tax-free interest. So it's your modified adjusted gross income plus half of your Social Security benefit. Now, if you're married, it's half of both your Social Security benefits plus tax-free interest. So all those municipal bonds that everybody's told you are tax-free, well, they are going to be used in the computation of your Social Security tax. All right. So that's your provisional income. Now, what the IRS does is they take your provisional income, and based on that figure, they determine how much of your Social Security is going to be taxed. All right. Are you confused yet? Is it Russell Crowe and A Beautiful Mind up on the chalkboard? That's what I feel like. All right. So let me show you what that looks like. Now, this column here is your provisional income. So this is your provisional income, and these are the rates that your Social Security is subject to taxation, and these are the filing statuses. So we have married filing jointly, and we have single, okay? So if you're married filing jointly and your provisional income is under $32,000, then 0% of your Social Security is subject to taxation, okay? If you're married filing jointly and your provisional income is between $32,000 and $44,000, then 50% of your Social Security is subject to taxation. Now, here's where the confusion lies, and I'm going to get into this a little bit more in the example. When I say 50%, a lot of people think, oh my gosh, my Social Security is taxed at 50%. No, 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 no. What I mean by that is 50% of your Social Security amount. So the annual figure for your Social Security. So let's say you get $1,000 a month in easy math, $12,000 at the end of the year. So if 50% of your Social Security is subject to taxation, that means out of that $12,000 that you got for the whole year, $6,000 is included in the computation of your taxes. So that $6,000 is going to be taxed at whatever rate, whatever your modified adjusted gross income, whatever your tax rate is, your effective tax rate. Now, if your provisional income is over $44,000 and you're married filing jointly, 85% of your Social Security benefit is subject to taxation. That's why you see all the advertisements or news articles that say, hey, 85% of your Social Security could be taxed. It's not 85% of the entire amount is going to be taxed. Like, if you have $1,000, they're going to take $850. No, 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 no. If you have $1,000, $850 of that is going to be subject to taxation. That $850 is going to fall into whatever your bracket is for taxes. A 22% bracket, 20%, whatever. If you're recently single or you're single going into retirement, you really need to pay attention because your taxes are going to be higher when you're single than when you're married. So if your provisional income is over $25,000, 0% of your Social Security is subject to taxation. If you're between the ages of, or if your provisional income is between $25,000 and $34,000, then 50% of your Social Security is subject to taxation. And if it's over $34,000, if your provisional income is above $34,000 a year, then 85% of your Social Security is subject to taxation. Okay? So that's the numbers. Let me give you the real world example. All right, so let's look at a real world example. I've got a married filing jointly couple. Both of them are on Social Security. They're taking a distribution from their IRA. They have capital gains taxes and they have tax-free interest. And we're also going to look at a single filer. They get an IRA distribution, they have Social Security benefits, they have capital gains, and they have tax-free interest. And I want to show you with the exact same figure for their provisional income, how their Social Security computation is different based on how they file their taxes, married filing jointly versus single. All right, now remember, your provisional income is modified adjusted gross income plus half of your Social Security benefit plus any tax-free interest. That's how the IRS determines how much of your Social Security benefit is going to be used in the calculation of your overall taxes, okay? So, married filing jointly, we have an IRA distribution of $15,000. We have $36,000 in combined Social Security. We have $2,000 in capital gains, and we have $500 in tax-free interest. So, for provisional income, we've got $15,000 in IRAs. We have half of their Social Security benefit being calculated into their provisional income. That's $18,000. We have $2,000 in capital gains, and we have $500 in tax-free interest. So that gives us a total of $35,500. So based on that figure for provisional income, their Social Security, the computation or the calculation for their total income, 50% of their Social Security benefit is going to be used in the computation or calculation of their taxable income. Okay, so their Social Security is not taxed at 50%. It's just being 50% of their Social Security is being used for the calculation of their total income tax. Confused? Russell Crowe, beautiful minds, all kind of flashing back? I feel you. So let's look at a single filer. We're going to get the same provisional income number, but I want to show you how their Social Security and the calculation of that's going to be different. So we've got $20,000 in an IRA distribution. We've got $24,000 in total Social Security, $3,000 in capital gains, and $500 in tax-free interest. So for this individual, single individual's provisional income, $20,000 in IRA distribution, $12,000, which is half of their Social Security benefit, $3,000 in capital gains, and $500 in tax-free interest. $35,500, same figure. But as you can see, 85% of their Social Security is now being used in the calculation of their taxes just because they're single. So if you're married filing jointly going into retirement, you need to be aware of your tax brackets, especially when one of you passes away. You want to understand that when one of us passes away, our taxes are going to go up. If you're single, you really want to know, hey, going into retirement, your taxes are going to be higher. The calculation for your Social Security tax is going to be higher. So how is my Social Security benefits taxed? Well, this is how it's taxed, and this is something you really need to know.